All right, traders, welcome to today's trading recap. First things first, happy holidays. I hope you enjoyed a very restful and refreshing long Thanksgiving holiday. I know I did. I like to use these long weekends as an opportunity to disconnect off of my computer, just refresh my mind, clear my head so that I can come back to my trading workstation and continue to crush it. Let's get into it, folks. Today is Monday, November 27th. It was by all means a very slow trading day, but it was still a very profitable trading day. And sometimes I feel that if you know a particular trading week is going to be slow, and these are the times where you may have to modify your trading entries and exits. Let me show you what I mean, okay? First things first, what you're seeing on the screen is today's morning session on the Nasdaq. You guys know I love the Nasdaq. I don't care how slow the market is, okay? The Nasdaq is always going to give us incredible and profitable trading opportunities almost every day, regardless of how slow you think the market might be, okay? And the smart traders and the professional traders, and probably the majority of my customers and clients who are very active traders, they all love the Nasdaq as much as I do, okay? And yep, you guessed it, what you're also seeing on the screen is our proprietary volume indicator color band overlaid on top of the chart, which allows us to get the direction right of the market. Because I've said this 1,000 times, if you cannot get the direction right, then don't even bother trading. Okay, it is my humble opinion and humble belief that getting the direction right, aka having some sort of trading bias before you enter a trade, is the only way to make money consistently when it comes to trading the market. And more importantly, if you can get the direction right and look for high probability entries on your trades, then guys and gals, I do believe, in my opinion, that is the holy grail. Case in point, let me show you what I'm talking about, okay? So this green and red color band, like I said, is our proprietary volume indicator color band. It does a world-class job of getting the direction right. Okay, case in point, bright and early this morning, the volume indicator turned green. But that is not where we go long, right? Because what we want to do is we want to wait for the market to prove to us that this trend change, which was identified here at about 4 o'clock in the morning, okay, we want to make sure that this move is real and it's not a fake move, you understand? And so how I determine that is, number one, I got to see the market give me an upward flush. It's got to start moving to the upside as soon as it turns green. Okay, and yes, that happened. You can see that quite clearly with your eyes. Now, more importantly, okay, number two of this technique is, yep, you guessed it, I have to see the market retrace, and give me one of these. Okay. What is this called? Well, guys and gals, this is a perfect retracement trade within the context of an established trend. That's it, right? If you can just master these two patterns in the market on any symbol of your choice, then I'm telling you, guys and gals, you're going to start seeing consistency in your trading. Like, these patterns are just going to start jumping out at you. You're going to be able to use it as an opportunity to take a high probability trading setup. You understand? Anyway, so this is how I normally play these retracements, okay? I look to go long the open of the next bar whenever I see this signal bar print, okay? This is my long entry, and I place my stop loss 1 or 2 ticks or pips, if you follow along in Forex, underneath the signal bar's low. All right, so far so good. Now, when it comes to taking profits, all right, the way that I teach my customers and clients, a super high probability way to actually make money is to look for 1-to-1. All right, this represents 1-to-1 risk reward. You're basically risking 1 to make 1. And of course, ideally, you want to make a lot more than that, right? You want to make 2-to-1, 3-to-1. In my case, the Nasdaq, I have seen the Nasdaq consistently give me 4-to-1 and many times 5-to-1. But, guys and gals, on a day like today, where you know it's going to be slow, okay, What you could do is whenever you see the market hit your 1-to-1 risk reward, which is what I always think is your starting point, all right, this is where you start looking for opportunities to get more aggressive at managing your trade, okay? So at this location in the chart, when you've hit your 1-to-1, you've locked in profits and you're feeling good, okay? What you could do is think about maybe just moving up your stop loss. All right, so let me get rid of this line up here now that we've hit our 1-to-1. What you could do is move up your stop loss to just start trailing it bar by bar, right? So we no longer need this line because that's our entry line and we're already in profit. And what I'm describing here for you is just trailing it bar by bar. You understand? Because this is a way to maybe squeeze a little bit more than 1-to-1 while also trying to be somewhat safe on a slow day, right? Because a slow day is also a slow volume day, and you know this is a volume indicator, so we need a lot of volume. But just in case we don't get that significant amount of volume, then this idea of trailing every bar's low is not a bad idea to lock in profits and squeeze in more, right? And if I fit this back to scale, this particular trade happened at, I think I took this around 8:30-ish, this first one. You know, I love trading the morning session. And there was also a second opportunity right here, which unfortunately I did not take. I missed this second trade here, okay? But yep, you guessed it, showed up right there as well. Here would be the entry. There's the stop loss. There's 1-to-1 right there, okay? So whenever the market hits this location in the chart, then you could take this stop loss, right? And then just start trailing it bar by bar, right? So let me just clean this up a little bit here. Let me zoom back in there. Something happened. Okay, wait, there it is. This was the setup here, the second setup. Okay. So let me just recreate this for you here. Entry, stop loss. There's 1-to-1. Okay, that gets hit. Like I said, it happens more often than not on the Nasdaq. You'd actually be shocked at how often 1-to-1 gets hit on the Nasdaq. And then you could, like I said, move your stop loss to the bar low, and then you could remove the other two lines in the chart and then just move your stop loss one bar at a time, and you'd eventually be taken out here. Okay, so one way to do it, right? There's many ways to manage a winning trade. I mean, let's just be honest. Catching a winning trade is a good feeling to be had, and if you followed the rules on how to trade this volume indicator today, then it was another profitable day for you. And what I want to do here in this video is really just show you some other ideas on how to tackle those slow days, or you know, those days where all of us come back from a very, very long weekend like Thanksgiving, and you could apply this to Christmas, New Year's, stuff like that. But yeah, man, another profitable day. Congrats to all you guys and gals who were trading today and you caught this move. It's always a great feeling to have when you're profitable and make money on a slow day, and I'll see you on the next trade. Guys, that'll do it for this video. If you'd like to get your hands on this powerful volume indicator, then get in touch, call, text, email, whatever's convenient, and I'd be happy to hook you up with a free one-on-one demo, really show you how this volume indicator is going to supercharge your trading. Guys, thanks for watching this video, and I'll see you on the next trade.